Welcome to Capital Crew, your go-to source for the latest in financial and global news. Today, we're diving into a development that's sending shockwaves through the energy markets and impacting the wallets of millions across Europe. Picture this: Russia, a major player in the global energy arena, has just thrown a curveball by temporarily banning diesel exports. As a result, diesel prices in Europe are on the rise, causing concerns for businesses and consumers alike. Join us as we unravel the intricacies of this critical situation and discover how it might affect your bottom line. Stick around because you won't want to miss the financial insights and analysis that we have in store for you. Now let's jump right in. Russia, a global energy giant, plays a pivotal role in the complex dance of international fuel markets. Its vast reserves and strategic positioning have made it a major supplier of diesel to the world. In 2023, Russia held the title of the world's largest seaborne exporter of diesel-type fuel, shipping over 1 million barrels per day from January to mid-September. These exports reached countries far and wide, including Turkey, Brazil, and Saudi Arabia. However, in a surprising turn of events, the Russian government decided to temporarily halt these vital diesel exports. The ban, which also encompasses gasoline, was officially enacted on September 21st and doesn't have a specified end date. This unexpected move sent shockwaves through European markets. Diesel prices in Europe surged, adding to the existing strain in global fuel markets. The world's oil refiners were already grappling with reduced crude supplies from Russia and Saudi Arabia, both major producers within the Organization of Petroleum Exporting Countries, or OPEC, and its allies. Despite being a temporary ban, the impact is significant, says Alan Gelger, Vice President of Refining, Chemicals, and Oil Markets at consultancy Wood Mackenzie Limited. The global refining system will struggle to replace those lost Russian volumes, especially when global diesel inventories are already at historically low levels. In Northwest Europe, the premium of benchmark diesel futures to crude oil, known as the ICE gas oil crack, spiked, temporarily reaching over $37 a barrel. Diesel futures for October delivery also saw a notable increase compared to future months, reflecting a bullish structure known as a backwardation. While this may seem like bad news for European consumers, the Russian government claims that these temporary restrictions will help stabilize the domestic fuel market, ultimately leading to lower prices for Russian citizens. It's important to note that there are exemptions to this export ban, including supplies to trade alliance partners in some former Soviet republics, intergovernmental agreements, humanitarian aid, and transit shipments. Additionally, fuel cargoes that have already been accepted for shipment by Russian railways or have loading papers for seaborne transportation can still be exported. This means that diesel flows will gradually decline as these cargoes are shipped rather than abruptly ceasing. The export ban encompasses all types of diesel, including summer, winter, and Arctic blends, as well as heavy distillates such as gas oils. Russia's seaborne exports of diesel-type fuel in 2022 accounted for approximately 3.4% of total global demand. This seemingly small percentage translates to nearly 1 million barrels a day being taken off the international market. However, experts warn that Russia may not be able to maintain this diesel export ban for an extended period. The country could soon run out of tank space for storing excess fuel, which could force a reversal of this decision. Behind the scenes, the Russian government has been in extensive talks with oil producers to devise measures to tackle rising fuel prices. President Vladimir Putin mentioned that an agreement had been reached, but the discussions continued. The urgency to address soaring fuel prices stems from their significant impact on inflation. Retail gasoline and diesel prices in Russia surged by 9.4% from the beginning of the year to September 18th, surpassing the 4% increase in overall consumer prices during the same period, according to Federal Statistics Service data. The escalating prices have not gone unnoticed by the Russian population, and the government faces political pressure as the presidential election looms. Critics have been vocal about the impact of rising fuel prices on everyday life. In response to these concerns, the government has considered quite serious measures. First Deputy Energy Minister Pavel Sorokin confirmed that discussions are underway to address the issue. The diesel export ban in Russia is a critical development with global repercussions impacting not only European fuel markets but also the broader energy landscape. As the situation unfolds, stay tuned to Capital Crew for more in-depth analysis and updates on how this decision continues to reverberate through the world of finance and global news. Thanks a lot for joining us on Capital Crew. Don't forget to like, share, and subscribe for the latest updates on this and other important financial news topics.